For joining in. That's the sugar space, but with the festive season now behind us and domestic cotton trading at a 25 to 50% premium to international prices, we aim to get a demand check from a key garment exporter. Sivaramkrishnan Ganapathi, the managing director at Gokaldas Exports, joins us now to talk about that. Mr. Ganapathi, good morning and greetings of the season to you. I just wanted to understand first what's happening in terms of, the prices and the holiday season demand and pricing trends. Last time you said that in the coming quarters you're watching out for the holiday season closely. Has it been as per your expectations, and what is the demand trend looking like now?
So if you look at the US market, it has been doing reasonably okay so far, which is encouraging. Even though, the economists keep talking about recessionary trends in 2023. So far, if you look at 2022 till November, for which we have data, retail sales is about 7% higher than the previous year. And 2021 was also a good growth over 2019, that is pre-COVID year. So far, so good as far as the US market is concerned. Europe also, despite all the war kind of situation, last year on a low base of previous year, since last year was COVID impacted, Europe has also seen some growth. Now, what we need to look at is how is the growth projected to be in 2023 as we are looking at the future. And I'm hoping that, it may be a modest growth at this point in time. We geared ourselves for it, and since we focus a lot more on the US, which is the more resilient market, we seem to get a feeling that somewhere by Q1, we should start seeing some uptick from the current slowdown levels.
Till November this year, you said US retail sales are up 7% year on year. You've looked at, you've operated under recessionary conditions before as well. Could you tell us you said, and you're more US exposed, which is more resilient, and you expect modest growth. What is modest? I mean, 1-2% kind of growth or 5%? What's your expectation? And how does that, what is the swing for you based on these numbers, retail numbers?
So difficult to hazard a guess at this point because, we are all future gazing and crystal ball gazing, right? So in a normal time, I would expect ourselves to grow at, well in excess of 20%. But a modest growth would be, single digit percentage point. And I feel that at best, we would be under that pressure till, probably Q1, Q2 of the forthcoming year at worst, I'm saying, sorry. And after that, we should start seeing a good growth. So if I look at YOY, I'm reasonably hopeful that we should have a good growth, 2024 over FY24 over FY23, because the second half should be better. That's my crystal ball gazing for you at the moment.
Single digit growth, revenue growth in Q1 and Q2 of FY24, and then things should start to pick up. And full year 24 over 20.
Pick up strongly in the second half of next year. That's what I'm indicating. Yeah.
So in a sense, basically, you've also kind of scaled down your earlier revenue projection of 2,300 crores, which would imply an upwards of 20% growth for this year now to single digit, assuming that you do high single digit.
No. I'm so sorry. This year's growth is well intact.
Okay.
We will be in that ballpark between 2,200 plus kind of revenue growth. So that that nothing takes away from growth in FY23. FY24, early part of FY24, we may see a slower start. And then in the second half, I'm anticipating that we will pick up with a strong growth in the second half of FY24.
All right. So that's about FY24, and FY23, you're saying there's no problem with regards to growth. Two things stand out in your business, and they're probably correlated as well. You can correct me if I'm wrong. One is the increasing contribution coming in from outerwear. From FY19, which is 30%, it's grown to around 41% of your sales. And the second is increasing contribution or increasing average sales price. So outerwear obviously is a higher ASP product for you. With the harsh winters in North America, do you expect this to grow faster than your regular growth? By the end of this year, what could the contribution of what could the contribution of ASP be, higher ASP products, and the contribution from outerwear?
So outerwear contribution has been steadily going up. It will reach a certain peak soon for us. Say, we probably would max out at about 45% or thereabouts. So as the outerwear share keeps growing, our ASP will also keep going up. We will have to have a balanced portfolio between outerwear and fashion wear and sportswear. So from that perspective, we will see that while outerwear demand has been fairly robust, and this harsh winter means that the stocks will go down in retail, so they will come back for more demand in the subsequent year. So players like us who specialize in outerwear will see reasonably good traction.
Okay. Since there is a bit of a slowdown globally and you're also talking about a slight moderation, do you think the capex plan that you put out of 230 crores for the next 1.5 years, would you have to scale it down? I mean, would you look to do that?
So we have slightly, deferred it, but not really intend to scale it down at all. So the reason is that I'm very, very confident of, of the long-term trend. And when I say long-term, I'm saying even, 1 year and above kind of, trend. The whole movement of production into India is being endorsed by most of the brands. People like, companies like Gokaldas is getting a lot of, questions and queries and inquiries from customers. So I feel that, we do have a solid future, and there is no reason for us to scale down our capex plans at all. On the contrary, I think, we should start seriously contemplating acceleration of capex plans.
So this 230 crore capex that you've deferred, how long have you deferred it by?
Deferred by a couple of quarters, that's all.
Okay, and this would mean incremental revenues of what, around 450 to 500 crores for you, the asset turns in your business?
That is correct. We will have an asset turn of about 4 times. That could be a reasonable assumption. So, but then, the revenues also take a couple of years to pan out as the capacity has to come on stream and then ramp up. So that will be the trajectory. 500 crore plus will be the revenue expectation over the next couple of years, and it will keep growing.
500 crore plus is the revenue expectation from where? From your new MP capacity, the capacity that you're putting on board?
Capacity. We are also looking at knits capacity creation, some more additional capacities we will be creating going forward. So all of these start helping.
Okay, it's also that knitting facility in Tamil Nadu, right? What is the date of completion for that facility?
We are anticipating by end of Q1 or early Q2.
Okay. All right. We'll leave it there. Thank you very much, sir. Appreciate you joining in, and good speaking with you as always. So maybe, some pullback in growth because of what's happening in the US, but that's only for the first half of FY24 before things start to pick up again. But it's a solid story in the textile space. And now after the correction, valuations have come back as well, pullback as well. The market is in the green. We were down 25, 30 points only, so it's not as if it's a huge reversal or anything, but for what it's worth, things are at the high point of the day now. 18,136 is where we're at. We'll take a quick break. Mitesh is back with us to comment on the market, any new trades he might have, and we'll come back with that in just a bit.